The tech sector having a few rough weeks. The Nasdaq trailing off since mid-February. It's now down about 8% just since the start of the year. Much of that pressure coming from the Mag 7. Joining us right now is Dan Niles. He's founder of Niles Investment Management. And Dan, I know you started the year without liking any of these Mag 7s. You were worried about a lot of different issues. Is that still the case?
Yeah, unfortunately, Becky, that's still the case. And the Mag 7, to round it out, are down 13% year to date on average. And I think it's a mistake to think it's a problem with tech stocks in general, because if you go overseas and you look at the China internet names, those are up 22% year to date if you look at the K-Web, for example. And I think it's also a mistake to assume this is just all tariffs affecting them, because they get affected the least to some degree by the tariffs because they don't sell that much in physical goods relative to the rest of the market. And if you look at sectors like staples or materials or industrials, those are all flat to up. And if you look at the MSCI All Country World Index, excluding the U.S., that's up 8% year to date. So this is a problem with U.S. large cap tech stocks because their estimates have been going down, and in some cases from the middle of last year for the top line. And if you look at Q4 results, when they reported 6 of the 7 Mag 7, those estimates went down for the subsequent quarter. And so that's really the issue.
You know, the conventional wisdom is that capex spending going into AI, going into a lot of those big names has not slowed down. But you take issue with that conventional wisdom.
Well, math takes issue with that conventional wisdom, not me. So if you look at Microsoft, for example, which is the biggest capex spender out there, they're going to spend over $80 billion this year. You know, people look at that and they go, wow, you know, fiscal year 25 capex this year is going to be up over 50% for Microsoft. And you get all excited and you go, wow, that just shows capex demand is strong. If you look at it on a sequential basis, because remember, Microsoft's fiscal year ends in June. On a sequential basis, capex was growing about 16% on average each quarter of last year. They have guided to flat sequential growth for the next 2 quarters. And so that's why, and you can see that in a lot of the companies, whether it's Amazon or the other big names out there. And so it's just looking at the math, not me, and you go, well, that's slowing down. And then you look at estimates for what revenues are supposed to grow at, for example, at a company like NVIDIA, where investors have revenues growing at about 10 to 11% each quarter sequentially for the next 4 quarters. And you go, there is a mismatch there. But I do like certain areas that are related to AI.
Can I just wait before you tell us what you like? Just NVIDIA will say that extra spending growth is going to come from other companies, not just the big guys who have been spending to this point. But as it gets cheaper, as the use cases kind of expand, that you'll see other companies stepping up to increase the spending. Do you think they're wrong on that?
No, but again, it comes down to timing. Because here's the thing: you have a killer app right now out for the consumer in either the smartphone or the PC. And the problem is you don't. Apple, for example, pushed out their Siri upgrades for AI out to 2026. So you have this sort of gap between training, where you're already training on all the data available on the internet for the largest models that are, applicable. So that's going to slow down. But the inference spending, which is what you're talking about, which I'm bullish on, you're going to have this sort of, digestion phase, which is what I've been talking about for a while now, in the middle, where training spending slows down. You don't have the inference spending pick up because you don't have things like, Siri AI out sitting on all the smartphones that people use. And so I think you're going to see that slow down. And my point is that I don't really care what NVIDIA has to say, because I'm looking at the biggest customers out there and what are they doing. And then don't forget, yes, you're going to have some other people spending on AI, but do you think that potentially China has been pre-buying in front of sanctions? Obviously. And so you've had a lot of demand pulled in because of that as well. And you're going to see that fall off on the other side of it.
So you were starting to say what you liked, and I cut you off. Go ahead and finish that thought.
No, I started the year with my top picks, and 2 of them were related to AI, but it's companies that take advantage of all this money spent on AI infrastructure over the last 2 years. Well, you're producing all this data, but then companies want to get access to it. And so that's why I like Cisco. I think you're going to see an upgrade in enterprise for those networks. And then telecom carriers want to be able to let consumers through fiber get access to that as well. And so you've got big upgrades going on, Deutsche Telekom, British Telecom overseas, and then in the US in terms of BEAD funding, et cetera, of wanting to let consumers get fiber to the home so they can get access to this data. And so that's where I'm focused on. And then as well, companies overseas, such as in China, where you're seeing, because of DeepSeek, investors going, a lot of those companies are trading at half the valuations of the US tech companies. They've been given up for dead, but they kind of had their ChatGPT moment with DeepSeek earlier this year. And I think you're going to see some improvements there. And then we've got things like banks we like, as well as the mid-cap value space, which hopefully is more immune to a lot of these pressures we're seeing as these tariffs kind of move in and out. Those should do better, I think, going forward because the valuations are just a lot cheaper than the large cap stocks.